Okay, so we're going to talk about a point that was brought up in the chat room. I'm making a recording of this so others can watch it later. We had the markets sell off quite sharply. They were up strong to start with this morning. From yesterday's close, 292, let's say, to 29.22. They were up 15 points or so. And then they get this big sell-off here. And what the media comes out and says, or what the catalyst says, is the interest rate has inverted again. Short-term bonds are now trading, the interest rate on short-term bonds are now higher than the long-term bonds. So let's just talk about the bonds first. So normally what happens is that the buyers of bonds, the further out you go, they demand a higher interest rate because they're giving you their money for a longer period of time, and there's more risk involved. So for that, they demand a higher rate of interest. Whereas short term is usually 30 days to under 2 years. You can't demand as much interest rate because it's a very short term. Lots of people want their money in that. So there's typically the interest rate for short term is much lower than the longer term. But what happens is when there's fear for a recession, then there's a flight to safety, being U.S. Treasuries. So they sell the market, they sell their stock in the market, and they move all their money into the bond market. As such, that drives the price of bonds higher, and interest rates are inverted to price. So as the price goes up, interest rates come down. And so now long bonds are trading, the interest rate on long bonds is lower than short term. And that's an indicator that the market fears that there's a recession coming. Now we've got this big trade war, and there's lots of things that are indicating that, and already markets are slowing down in lots of countries. 11 of them are already lowering interest rates to try and stimulate their economies to keep it from going into a recession. So that's the catalyst. You get a bond inversion, interest rate inversion, and the market sells off. But that isn't the reason the market sells off. Let me rephrase that. It's a catalyst, so the market sells off, but that's not the reason that markets are selling off. Markets are selling off because they're up strong from the bottom here, and sometimes they just need a reason to take a profit. They were trading up to resistance. They've had a big move off this double bottom. They're trading up to resistance. It does need to get through the 29.50. I've been talking about that. And so even though the interest rates invert, that usually indicates a recession is coming from a 1 year to 1.5 years from now. So what's changed between this morning and 30 minutes ago, early this morning and 30 minutes ago, or 2 days ago and 30 minutes ago? Nothing, really. Interest rates inverted, sure, but that's a long-term predictor of a recession coming in the future, 1 year to 18 months out. So, but what happens is it becomes a catalyst, like nothing's changed in the world today. There is no effect of bonds inverting today that it makes us different from yesterday or different from tomorrow. But it's just the catalyst. The markets sometimes needs a reason to sell. And the reason could be irrelevant. President Trump tweets something. I want to buy Greenland. Denmark freaks out, says it's not for sale. Trump cancels his trip to Denmark. I mean, so that maybe that scares the market, scares the EU, whatever. Or Trump tweets, I'm going to force the feds to lower interest rates. Markets pop because they think rates are going to come down. But there's no change in the world. You can still go out and buy a cup of coffee tomorrow. Even though bond prices have inverted, you can still go out and buy a cup of coffee tomorrow at the same price as you bought it today. So it's just a catalyst that the markets just sometimes need a reason when they get to areas of resistance and they get to an area of or support that they need, and for it to change direction or to continue on, it just needs a reason to do that. And the reason here is the media reporting that the long bonds interest rate is inverted with the short term. Now, I don't even know which ones they inverted. Usually, you're looking at the 30s over the 30-day, 30 years over 30-day is the true indicator. 10 over 2, 10 year over 2 is really not an indicator of future to come. But the markets see that, the traders, the algos get a hold of it, and then it sells off. So I guess the point is that, yeah, sure, that's what scared the market, and that's what caused it to sell off. But that's just a catalyst. That's just a reason. That just gives the market a reason to go down or to sell. Nothing's changed. Just as a reason. I mean, this is going to predict a recession a year out. So nothing's changed between today and tomorrow and next week or next month. But the catalyst is what sells the market off. But it's more of a. Is it because? Is the market selling off because it's at resistance? It's at the 50-day moving average and all these things. So the market sells off because of that reason. And what the media needs to do is they need to report some reason why the markets are selling off. And it could be nothing more than just a technical indicator here, where it reaches resistance and sells off. Just like any stock, when it gets to resistance, it sells off and backs off. And the media just reports it and gives it a reason. Okay, why is the market down? Well, let's have a look and see what are all the reasons that it could be that the market is down. Or as the market pops here, let's look at all the reasons why it might be popping. It might have popped because it double bottomed in here and held support. So all the shorts have to cover and it gets short squeezed. But they say, well, China and the United States are talking, and it pops. But is that the reason? Or is it reason because it's double bottomed in here? And the shorts cover and away it goes. And now it's quadruple topped in here and fails to break through it. So now we get a sell-off. But the sell-off isn't because bonds inverted. I mean, that's the catalyst, but that isn't the reason the market sells off. The market sells off because it's at a quadruple top, it failed to break through, so now traders are selling into that. And it just coincides with the inversion. So it's an esoteric point. It's kind of don't put I guess what I'm trying to say is don't put too much weight into what the news is saying and when the markets sell off, because it's just a very short term. It has no bearing on the economics of the world that today bonds inverted and the market sold off. That's I hope that explains it a little bit. Let me know. Let's just post if that helps what I